Welcome to TheoTRADE. This is Don Kaufman. It's February 16th, 2024. We are just about 30 minutes after the cash close here on this Friday afternoon. S&P's finishing down today about 32 handles and, well, what has been a rather tumultuous trading week. Okay, let's get right down to business here on this TheoTRADE weekend update. AI, when different, ends up, well, the exact same way. First, let's kind of recap a little bit of the price action here inside of today's trading session because, well, there was a significant amount of price action in here. And of course, as I was saying moments ago, S&P's closing out the week mildly down, but some pretty strong sell side activity in today's trading session. S&P is closing down about 0.6%. Volume really started to surge towards the cash close. News breaking throughout the course of the day. A lot of Fed speak. Look, one of the aspects that I want to focus on more than just, hey, look, there's price action in the marketplace. It's not really going to help. We got to actually look in detail at some of the sectors. And one of the aspects that was kind of resonating with me today is market in terms of advanced decline line. Things started getting really, really squirrely throughout the course of the trading session. I want to explain exactly what I mean by that. In fact, to do so, I am going to start with tech, right? So technology right now just happens to be the market. And that's exactly why I'm saying, like, look, when different ends up the exact same way, basically just implies like, look, I keep hearing, no, it's AI, and this time is different. Okay, really, we're not going to have to look too far to actually see that. But I was talking about in the Wednesday night video and even last week. Last week, we were talking about, the great tech squeeze of 2024. On the Wednesday night video, I was talking about, look, there are cracks of volatility forming here. Okay, that idea of cracks of volatility, I cannot stress that enough. And one of the first things that I want to start with, and again, I was showing you advanced decline line. I'm going to come back to that momentarily because it's critical. But even prior to that, you got to look at some of the big tech. Tech is really starting to come under sell side pressure. And what I mean by that is, look, you're gonna bring up Apple to begin with. And you look at Apple, you're like, it's not that bad. Okay. But when I start saying that cracks are forming, let's go into auto expected moves. Auto expected moves really kind of gives you a better feel for, well, the week at large. And it's been a while since I've said this, but look, okay, right here is where the week started. And I'm highlighting where the week started. Where are we right now? Okay, significantly outside the lower edge of the expected move specific to Apple. Why Apple is so interesting to me is that Apple had significant news last night on Thursday that they're throwing their hat in the ring for the AI. Okay, look, if you say AI, you're going to rally, except it rallied and faded rather hard off of that. Apple shockingly closing down 0.8% today. Nevertheless, on the week, okay, it's actually down quite significantly on the week. So, all right, you're like, okay, it's one product, right? It's one product. They mentioned AI. By the way, the AI mention didn't just boost Apple. You can come into Nasdaq. Take a look at Nasdaq. Okay, the Nasdaq, there's the close, and that was actually that was Thursday night after the bell. The Nasdaq actually exploded by almost 60 handles when that news came out specific to Apple. So it was the entire marketplace, and then of course we faded off of it. So right now you have to look at this for what it is. The market actually faded AI. Moving along over here, let's actually jump next to Microsoft. Okay, Microsoft, which has been, one of the most pivotal AI trades. Look at it in terms of auto expected moves. Okay, shattered it. It's way outside the expected move. And again, all we're doing is saying like, look, the week started here, some big sell side on Monday, took off to the downside on Tuesday. It's basically been there ever since, almost 2 deviations. Okay, moving along. So you've got the market cap, of course, of Microsoft. It's good for $3 trillion, a little bit of Apple thrown in there. Moving on, of course, to Amazon. Amazon closing mildly outside the lower edge of the expected move. And last, but definitely not least, Google. Okay, Google got annihilated this week. So Google is a full-fledged 2 sigma move as well. And Google actually had some rough news on it that OpenAI is actually, getting into the search engine business, seeing some sell-side activity in here. But look, there's a lot more than kind of meets the eye. These are fairly significant percentage losses. And the reason that I'm mentioning this, if everybody's like, it's the Magnificent Seven, okay, well, we're seeing rotations, and rather significant rotations, okay, out of 4 of them. And today, Meta got interesting today because Meta was actually to the upside of its expected move. In fact, let me highlight this a little bit more because this is, again, you really want to know what's driving markets right now. Take a look. So Meta, all right, Tuesday has a big sell-off, hits the lower edge of the expected move, rebounds massively. I mean, we're talking a move from basically 456 people, okay, rockets back to 488 and gave back some, not all, of the gains this week. That is going to be critical to watch. But once again, cannot stress enough. You have 4, okay, of the key constituents of what's been termed the Magnificent Seven taking pretty big hits. All of it actually gets swept under the rug when you see stuff like Nvidia. And Nvidia, in this case, okay, actually gave up most of its gains on the week as well. All right, things are getting a little bit more scary in here. Meanwhile, Tesla actually did close the upper edge of the expected move, but with all due respect, it has had absolutely no love on a year-to-date basis. Tesla's still actually down, of course, some 20% on a year-to-date basis. All right, so I started with that because I wanted to see some cracks in there. Now, Nvidia, coming back over to Nvidia. The close here got a little bit wild. Moreover, if you take a look at some of the order flow, and it's rare, very, very rare that I actually pull up some of the order flow in here, okay? When I'm talking about order flow, I'm actually talking about the number of calls traded versus the number of puts traded at the bid or below or the ask or above. Okay, one of the interesting things that we started to see in here is that the call buyers, they just were not out in force. In fact, okay, you can make an argument that put buying was actually getting heated at one point inside of Nvidia today and is largely responsible for some of the more significant sell side activity. Moreover, okay, stock that's on everybody's mind, of course, has been Super Micro. Super Micro, well, yeah, that happened. And when I say that happened, what happened? That is a 20% decline. Again, a 20% decline in a single trading session. Okay, here's actually a significant, if you will, shot across the bow. Pay careful attention over here. First thing I want to show you is, look, in every marketplace, okay, there's a bid, okay, and there's an ask, right? It's called the bid and offer. So if you have a market, if you're trading a market, let's say the market is, $10 at, for instance, okay, $11. If you go out there, it doesn't matter whether it's a call or put, but if you go out there, right, and you say trade it at the ask or above, you're just basically saying, I'll take it, right? Boom, pay the $11, you're filled instantaneously. What I want to show you, okay, is traded at the ask or above is really, it's representative, okay, of traders that they just don't care. They're just sweeping the market. They'll take whatever that offer is, but they're definitely on the buy side. Look at the number of puts right now. That's 148,000 puts, okay, that have actually traded to the ask or above. And okay, there's only 112,000 that have traded to the bid or below. So for the most part, the numbers of puts that have actually traded, the ask or above, it's fairly astronomical. It's really, really picked up in here. And it's extraordinarily dangerous because the exact same momentum that actually drove us to the upside, it's options activity, that exact same aspect of buying puts will actually send this stock into the ground. And we're going to see and what we're going to be looking for early next week. And early next week, by the way, starts Tuesday. Of course, the markets close on Monday for President's Day. But coming into Tuesday next week, let's just say that this is a 3-day weekend, probably a good thing, cool off a little bit. But yeah, you may see put buying activity expressly inside of, again, Nvidia, because one of the things is we started seeing it in Nvidia, but nevertheless, okay, SMCI, that happened, people. It's down $200 today, back to an $800 product. Volatility is absolutely erupting in this, okay? And again, a lot of it is put buying that drove us into the ground over here. And that's why I say when different ends up the exact same way, okay, that's what I'm referencing. I mean, people really start to buy into the fact that, the bell goes off. You can make money. You just got to be on the long side of it. Look, big cracks forming. I am not saying, okay, that Nvidia is over and done with. But I got to tell you, okay, this is the most serious, okay, look that we've had at Nvidia and sell side activity okay, since actually the rally began at the beginning of the year. There's a lot of vol cracks forming in here, okay? The SKEW is heavily inverted, but that put buying inside of Super Micro is I mean, look, it's the hallmark sign of not just volatility coming in, but it's the hallmark sign of getting driven into the ground. So the exact same kind of momentum, as I said, that spirals you to the upside, okay? That gamma squeeze can spiral you right back down. You buy puts, the market makers sell you the puts. When the market makers sell puts, what do they do to actually hedge those puts? When they're selling puts, what are they? They're positive delta. How do you hedge positive delta? By selling shares of stock. And they'll sell that stock into an oblivion. We're going to be watching. We're on Nvidia Watch 2024. Let's keep an eye on it. Again, we were talking about inverted SKEWs, okay, on Nvidia. And, you know, when I actually put these bullets together, I was thinking about some of the inverted SKEWs. At this point, though, okay, forget about the inverted SKEWs. When I'm talking about inverted SKEWs, look, Nvidia actually has earnings next week. So that's actually going to add and complicate things, but the earnings are actually met with an inverted implied vol skew. When I say, kind of forget about it, look, at this point, I'm more interested to see if people are just going to come out and buy puts. You start buying puts and you will drive Nvidia, okay, down substantially. But the inverted skew is also one of the telltale signs, the hallmark, if you will, of increased pressure to the upside. So it's a supply and demand impact. And when you see, okay, if you will, call implied volatility is higher than put implied volatility, the skew, okay, it's wild. Okay, as you actually look at the option chain, we're going to go way out of the money. The out of the money calls, okay, way out of the money calls. Let's get crazy. Let's go to the 1,000 strike. You know, you're what? You know, $270 out of the money, 117% implied volatility. 117% implied volatility. Okay, go a few $100s out of the money in the put side. You don't see anything really like that. Okay, I mean, I'm scrolling out of the money. Yeah, it picks up on the puts over here, some tail risk. Okay, but the call, the skew is phenomenally large. Okay, you've seen that in equities before, but it's rare to this magnitude. Okay, and of course, Super Micro is just to an extent, you know, above and beyond. So again, those are telltale signs. Now, the reason I'm spending so much time in a weekend update, you know, on one or two stocks, obviously Super Micro got clocked. Does that mean Nvidia is going to get clocked? Okay. A lot of people, no. Well, okay. In short order, yeah. Well, they hit Super Micro and they're going to actually come from Nvidia next. The problem with Nvidia, okay, its earnings, maybe its earnings are spectacular, maybe they're not. Maybe even if it has spectacular earnings, you know, it's been buy the rumor, sell the news. Okay. But the problem with it, number one, you have like an $83 expected move. And number two, okay, you don't have anything else holding the market together at this point. That, okay, I want you to understand is probably the biggest, you know, to summarize everything I'm doing in this weekend update, that is the biggest takeaway on the weekend update over here, right? The reason I just went through Microsoft and Apple and Amazon and Google and even talked about how Meta gave up most of its gains in the week. The reason I went through those is to set you up for the fact that, you know, you have Nvidia, it's holding the market together, but barely. How well is it holding the market together? Go to the QQQ, apply auto expected moves. Are you aware that the Nasdaq actually closed the lower edge of its expected move, but it held the line? Okay, nothing is holding Nasdaq together but Nvidia. And not only does that need to be memorable throughout the course of next week, okay, it's everything. And that's why it's so critical. When you see Super Micro actually get hit, you really have to start to think to yourself, the psychology behind that, they're coming for you, Nvidia. Maybe it gets through its earnings, maybe it doesn't. Maybe it actually gets hit before the earnings announcement. But I'll tell you what, even if it pops after earnings, that thing could turn into Mr. Toad's wild ride this next week. That's why I keep saying, you know, yeah, it's different this time. Being sarcastic with that, it's never different. It always ends up the exact same way. All right, so we got through a little bit of Apple, Amazon, Microsoft inverted SKEWs. Obviously, some heavy put buying inside of Super Micro, and that put buying also kind of resonating into possibly Nvidia. But there's another kind of disturbing area, and it was the advanced decline line. And the reason I was bringing up the advanced decline line is, okay, we were seeing rotations. Specifically today, we were seeing rotations where the tech stocks were selling off, and we were trying to lift, okay, the financials. At the same time that the financials were lifting, we were doing what? Okay, let's lift energy. Now take a look at these stocks on the week, or I should say the ETFs on the week. In terms of sectors, this is what's crazy about it. Do you realize energy actually cracked the upside of its expected move? The financials cracked the upside of their expected move. So there's rotations coming into financials. There's rotations coming into energy out of technology. So what's the concern? The concern is this. Towards the end of the trading session today, there was sell side across the board. Nobody gave a crap. They sold everything. And they actually, towards the end of the day, they started coming for even the financials, which were having a spectacular week. Early on next week, look for correlation to pick up. That is one of the key takeaways as well. Again, got to be concerned about that. Now, spin around completely from there. Interest rates. Let's start talking a little bit about the bonds and about interest rates. Okay. From my perspective, rates have already exploded up. They have. Rates spike, right? Inflation maybe returns. And look, I can talk about, everybody's talking about the CPI and the PPI. So first of all, CPI came in hot, okay? PPI, all right? Yeah, sure, it's great. Retail sales, not so good. I mean, you didn't exactly have great data. Inflation is returning, okay? And the person that's buying everything is falling apart. Gotta love that. Anyway, with that being said, by the way, then the Michigan, University of Michigan Consumer Confidence came out. I find that that survey a bit of a joke. The consumer confidence, ironically, was really, really strong. So there is a plethora of data, very highly conflicting, but there's just no question that inflation is not dead yet. So the interest rates came soaring back up. Okay, look, I'm just going to level with everybody. I don't have a great feel for bonds right now. And I'm going to tell you exactly why I don't have a great feel for bonds. Bonds can trade, okay, either direction this next week. There's nowhere else to go to on this tape. Where are you going to go to? I want to buy dollar. Okay, dollar's already soaring. Okay, what are you going to do? Where are you going to go? You're going to rotate towards what? Okay, think about that for a second. Things are getting scary right now because categorically speaking, you used to be able to rotate out of the S&Ps into the bond market. That's actually a hard trade right now. I'll tell you what, okay, if you start seeing the S&P sell off, there is a chance that the bonds could actually rally back. And that's why I'm saying I don't have a feel for that. I'm not going to tell you to get long or short those bonds because the bonds, there's just nowhere else to go right now. You're like, oh, I could go into crypto. Yeah, please. Okay. We're talking about hundreds of billions of dollars that are moving. Not going to go out there and like, buy crypto. Okay. Look, if tech starts getting hit, crypto is eventually, that'll be next. Okay. That train is never late. So, I mean, markets do the exact same thing again and again and again. And crypto has been straight up. That thing almost looks like Super Micro. And I'm just making a quick point with that because there's always one in the crowd. Like, look, if you're a portfolio manager, you have billions of dollars under management. Okay. You always have to duck out of something. So if trade really starts to duck out of stuff like Meta, where are they going to go to? Right? You've already rotated like into the financials. This is ridiculous. Financials, they could be holding a huge bag of risk if this thing comes apart. Now the interest rates are going to be higher for longer. They really are going to be higher for longer now. And if the interest rates are going to be higher for longer, forget it. Forget it. Commercial real estate's going to come apart. Financials are going to take a hit. That's not safe. Energy, okay? Energy, if we're actually, going to be higher for longer, it could actually have recessionary fears. Energy can actually pull back. That's not going to be good. Where are you going to go? Somebody's like, I want to go into utilities. All right, utilities, it's just sell side activity. Maybe they do rotate there, but we could even see rotations back to the bond market. I'm telling you right now, I see the cracks in the volatility starting to come through, okay? If S&Ps start to really go for it to the downside, those bonds, they could even rally. And I'm giving you that feel right now because I am telling you, bonds start to rally with S&P selling off would actually be a very, very serious situation because at that point, you realize, okay, trade is willing to buy bonds in the face of any adversity. They'll buy bonds because there's simply nowhere else to go. And you want to know something interesting? I saw a little bit of that today. Okay, I saw the precipitous drop from PPI. And throughout the course of the day, bonds actually rallied back. That's why I'm actually covering it. People, things are getting crazy. Capital rotations are keeping the S&P 500 together right now. But as I said, you got to watch out. I don't like the financials. I definitely don't like energy, okay? And tech, well, you have your four largest market caps out there outside of Nvidia that are already getting tagged, okay? It's going to be a special time next week. Speaking of next week, Let's come right to the SPX and the expected move. So as I said, that final thought over there is capital rotations. And that's like, let's get out of tech and into financials. Let's get out of tech and let's get into energy. That kept the marketplace, all right, up. Did the marketplace finish the week up? No, I just showed you. Tech actually finished the week at the lower edge of its expected move. But the S&Ps cruised down a little bit, right? So on the week, we're a little bit lower. It's nothing to get too crazy about. But if that correlation kicks in and we start selling sectors across the board without discrimination, then you're going to be in trouble. Now, here is something that you're going to find very interesting. Obviously, we're coming into a 4-day trading week. Want to know the crazy thing about the 4-day trading week? Well, here it is. Okay, in the 4-day trading week, the expected move, let me highlight this again, zoom back in, right? In a 4-day trading week, the expected move is actually larger than we just went through. So this last week of trade, we had, let's just round it, about a $66 expected move, meaning that you're expecting a $66 move up and a $66 move down, right? Either or. Well, we cracked through that and came back up and then finished the week mildly lower. After that, we have a 4-day week, which is coming up, obviously. We're plus or minus approximately 67. Okay, less trading days, more volatility. Think about it for a second. That's where I say strap in. We're going to get a little crazy this next week. And people are going to point to the calendar. Wow, there's a lot of data coming out. Look, we've already had a lot of data, right? Most of the data coming out is, like B stuff, B rated. There's some FOMC minutes, okay, some ECB minutes. When I say that there's B rated data, right? It's just not, this is not front and center like, PPI. PPI is pretty good for today, but like CPI, it's nothing that crazy coming out. Nevertheless, I caution you, there's a lot of volatility packed into this next week, possibly because of Nvidia. The market right now, well, you've been kind of put on notice. Cracks of volatility showing up, and do not forget, okay, there is no different. It always ends up the exact same way. Thank you for joining us here at TheoTRADE. Have a wonderful holiday weekend. Bye-bye.